The new threat of 100% tariffs on China has sent the stock market back onto a roller coaster, which means that you probably have some questions about your 401k. Ross Mack from Macconomics.com is with us. Thank goodness to save the day. Ross, if someone is looking at their 401k today, what would you tell them?
Well, one, I think it's always important to say to yourself, am I a long-term investor? And if the answer is yes, then I think this is nothing more than just noise. In fact, right, anytime there's any period of market dislocation, volatility, I always recommend taking another look at your portfolio to see if you should actually invest more, right? Quite too often when we think about things being on sale, Black Friday, right? Black Friday is getting ready to come up next month, and everybody's going to run and go spend more money because they perceive the prices to be on sale. Well, guess what? Anytime there's some noise to the stock market, and this past Friday we see the value goes down over $1 trillion, maybe certain names are actually on sale as well.
So they say the 100% tariff, if it is carried out, what happens to the markets then, and what should people do with their money? You're saying maybe invest more?
So listen, I think, right, let's, if we compare today, right, or this current back and forth with China to earlier this year where we had the Great Liberation Day, if you remember then, it was a lot of noise, right? We would see the Dow Jones go down 1,000 points. The next day, Dow Jones recover 1,000 points, and then Trump puts out another tweet. So in other words, it was a roller coaster, right? And what I'm saying is that in the long course of time, right, there's always going to be something that sparks the market and make investors a little uncertain. And more importantly, they now want to sell their stocks. However, over the long course of time, all I'm saying is that it proves that by being a great disciplined investor and remaining consistent and not actually selling when things get scary, in fact, you make more money in the long run. And so, right, if the average return of, the stock portfolio is 10% and on an average year, and you're looking and you're saying that there are things that are causing the market to go down, well, maybe this is a time not to actually get scared, but actually to double down and buy more.
So, okay, so let's say someone knows nothing about the stock market and how it affects their daily lives. Explain why the average person should be interested in it, because you can make a lot of money, right?
Yeah. I think it's really important to understand when it comes to investing, this isn't a and or, right? I think this is a definite. You have got to invest. You can't save your way to wealth. You can't retire, especially in this economy where we're seeing inflation and the cost of living going increasingly starting to increase each year, right? I saw something where it said, back in the day, the average person would get their home. The average age was around 30s. Now, in order to afford a home, it's around 50, right? And so I think it's important that we understand there's a massive dislocation between extremely rich people and kind of that lower middle class, and the only way you can close that gap is if everyone is investing. And so I look at investing as saying, how can I allow my money to work harder for me than I work for it? And due to the cost of living, wages are not increasing at that same pace. So the only way to truly live comfortably in this world, right, is to actually allow your money to invest. And so to a person that's sitting at home not understanding what investing is, I talk about this all the time in my community, right, Macconomics. I think it's important you understand that we're taught to be consumers, but we're never taught to be investors. And so what is investing? Investing literally means, and to break it down in the simplest format, is having the smartest people in the world work for you. So investing, and I'll just start off by saying the base way is owning the S&P 500, the index fund, the most common. That's 500 of America's largest companies, irrespective if you're a Republican or a Democrat, right? I think it's legit. I think it's remarkable to have 500 of the top CEOs be your employees. Owning stocks literally is saying that these CEOs now work for you because they are working to return value to the shareholders. And so these are companies that you use every day, from Apple and Amazon to Microsoft and Netflix to your Apple phone, right, to, Home Depot, Target, Walmart, Visa, MasterCard. The list goes on, and I only named about 10. So now we're talking 490 other companies. And so I think it's important that once you say, okay, I'm actually ready to start investing, now it's a function of, okay, how much can can I afford to invest on a monthly basis? Because it's not a let me buy this stock one day and I'll get rich overnight. No, the idea is I want to say by working within my budget, I want to budget and allocate so that I can invest every month, right? We're used to paying bills every month. We should be used to paying our future self every month as well through the form of investing.
You are so amazing. I love free money advice. You always give the best. Ross Mack, thank you so much for your time this morning.
Natalie, thanks so much for having me.
Thank you.